Hi, I'm Christine Haganey, president of Valor Payroll Solutions, and we work with small businesses to help them with their payroll. So one of the things that we really enjoy doing is just putting information out there to help even our non-clients pay their employees correctly. And over the course of the last 14 years, working with hundreds, if not thousands of small business owners, I have seen 5 common mistakes that small business owners make, and I'm here to share them with you in the hopes that you don't make these same mistakes as well. So one of the main things that we see, or questions that we get asked about, is the difference between an employee and contractor. And often we see small business owners make the mistake of misclassifying their worker, who should be an employee, as an independent contractor. So we're not going to go into a ton of details today, but as a quick reminder, that distinction has several components, but an employee is going to be someone that you hire for more or less an indefinite period. They are going to normally receive training of some sort, maybe equipment that could be as simple as a computer, or it could be, if it's a working with your hands type of job, it could be literal tools that they need to complete the job. And they don't have any possibility of having a loss in the course of their work. And then you, as the employer, have discretion and control over when and how the work is performed. On the other hand, an independent contractor is literally in business for themselves, which means they normally are soliciting their services to multiple businesses, if not working with multiple businesses at the same time. Independent contractors will have their own insurance policies, bring whatever tools are needed for the job, and do not receive any instruction from you. So for example, if you hire a contractor to build a home, you are going to agree on the cost, what you're going to pay them, and the completion date, but you are not going to be there telling them when to start work each day, how many people they need for the job, what brand of tools to use. They're going to take care of all of the details because they're an independent contractor. They're in business for themselves. Another key piece is if the worker is performing a service that is an integral part of your business, then the relationship is more than likely an employee-employer relationship rather than having an independent contractor. So there are some new rules that came out this year, so we do expect to see more crackdown on that type of misclassification. So make sure that you really understand the difference and are properly classifying your workers. The second thing that we see a lot is also having to do with classification, but this is exempt versus non-exempt employees. So exempt employees are those who are exempt from FLSA provisions, including minimum wage and overtime. But the rules are very specific on who can be considered an exempt employee. They have to be making a salary of at least $684 per week, and they have to be performing the duties as outlined under one of the listed exemptions. So those are administrative, executive, professional. Then there's also exemptions for computer workers and outside sales. So make sure you're looking at that fact sheet. A good idea would be to have a great job description that clearly outlines all of the job duties, and then look and see if those job duties align with the duties in one of those exemptions, and ensure that they're making at least that minimum salary requirement. Now keep in mind, the $684 per week is the federal rule for the salary requirement for an exempt employee, but it can be higher depending on the state where your worker is. So for example, if you have a worker in California, you're going to need to comply with their rules on salary for exempt employees, which exceed the federal minimum. It is possible to have a salaried employee that is non-exempt, and I think that's where a lot of people get confused. You cannot determine exempt or non-exempt based on salaried or hourly. You can have an exempt employee that you pay hourly, although I'm not sure why you would. And you can also have a salaried employee that is non-exempt. So the difference between exempt and non-exempt is not simply if you're paying them a salary or if you're paying them hourly, but rather they can only be considered exempt if they meet the duties test and make at least the minimum required salary. If they don't do one or the other, then you are required to still track their hours, to pay them overtime if or when it's worked, and to ensure that they're making minimum wage. So a lot of times we see business owners opt to pay someone on a salary basis to try and avoid the administrative burden of tracking hours and calculating overtime. But again, exempt versus non-exempt is a classification made not dependent on whether they are being paid hourly or salary. And then that kind of rolls into the third thing that we see, which is miscalculating overtime. So there's a couple of different ways that we see this go wrong. Number one, if an employee is working in a bi-weekly pay frequency, the overtime calculation is always going to be based on each work week. So in a bi-weekly pay frequency, there are 2 work weeks. So for example, if the employee works 45 hours in week 1 and 35 hours in week 2, although the total hours are only 80, which is 2 40-hour work weeks, week 1 would be 40 regular and 5 overtime, and week 2 would be 35 regular hours. Again, different states have different rules, so California is going to always be an example there where overtime is calculated differently. That is after 8 hours in a day versus just the 40 hours in a work week. So make sure you're paying attention to your state's rules in addition to the federal rules. Another way that we see mistakes on overtime calculations is with a semi-monthly pay frequency. And that's where it gets even more confusing. So work week is defined as 7 consecutive 24-hour days, and that's the basis of determination for overtime. A semi-monthly pay frequency is not going to include full work weeks. It will usually start in the middle of a work week and it will usually end in the middle of a work week. So when you're doing payroll on a semi-monthly pay frequency, if you start the pay period in the middle of a work week, you have to look at the full hours in the work week to see if any overtime hours are due, which means you're considering hours from the previous pay period. Now you're not paying those hours again, but you can't just chop it at the pay period and then start over with your overtime calculation. You still have to look at the full work week, even though it's going to span 2 different pay periods. So again, kind of complicated. If you have a timekeeping system, your timekeeping system will usually keep track of the work weeks versus the pay periods and grab those overtime hours correctly. But if you are doing it manually, just keep in mind, you have to still go work week by work week to determine overtime, even though your pay period is going to chop in the middle of those work weeks. Next, we see people get in a lot of trouble with their payroll taxes. So this can be anything from not knowing how to set up remote employees in the right tax jurisdictions, either for income tax or unemployment tax, or simply not knowing when tax forms or tax payments are due. And even if you're using a payroll service provider, you as the employer are ultimately liable for all tax payments and filings, which means you cannot just simply sit back and say, oh, I have someone to do this. You still have to make sure that you are double checking, that you know definitively that your taxes are being filed and paid. The IRS has very, very steep penalties and interest, so you don't want to mess around with those because it can really not only eat up your money, but your time in responding to notices and trying to figure out what happened if you're not staying up on top of your tax payments and filings. And then lastly, small business owners are often completely unaware of some of the compliance regulations that go along with payroll. So for example, most states dictate how often you have to pay employees. In the state of Oklahoma, for example, Non-exempt employees have to be paid at least twice per month, which means a monthly pay frequency would not be compliant if you have non-exempt employees. Many states have rolled out state-mandated sick time, meaning you have to provide employees with sometimes paid, sometimes unpaid sick hours to use for specified purposes. Now, if you have a richer plan, usually you are not required to add the sick time, but you do need to be making sure that you're looking at the requirements of the states where you have employees and that you're meeting those minimum requirements if sick leave is mandated. More and more states are rolling out paid family and medical leave programs. So that's something that you have to set up in payroll to ensure that you're taking those funds from employees as you're allowed, and that you're also calculating and paying those taxes as required. And then we're also seeing an increase in states mandating employers to have some type of retirement plan for employees. So again, you just have to know the states where you have employees and really pay attention to the rules that go into payroll. Because at the end of the day, nearly every piece of payroll is regulated. Again, from how often you pay employees, how soon after the pay period ends you have to issue their check, how soon after they're terminated you have to issue them their final check, minimum wage requirements, overtime requirements, paid sick leave, paid family medical leave, and retirement mandates. Those are the most common that we see, but you have to be aware. You cannot simply hire a payroll service and expect that everything will go right, for example. So again, 5 common errors that we see. Number 1, misclassifying contractors when they should be employees. Number 2, misclassifying exempt and non-exempt employees. Number 3, miscalculating overtime. Number 4, not handling payroll taxes correctly. And then number 5, simply not being aware of compliance regulations in your state or even at the federal level that apply to payroll and how you process it and pay your employees. So again, we are here to help. If you have questions, if you think maybe you're not doing something correctly and just need someone to double check what you are doing, drop your questions below or reach out online. You can find us at valorpayrollsolutions.com, and we would be happy to help you figure this out.